Hello traders, it's Thursday, March 17th, a day after the U.S. Fed's decision to maintain the current level of interest rates. And here is WM Options market review for the New York session. In spite of policymakers agreeing that the U.S. economy is strong enough for increasing interest rates, yesterday the central bank's open market committee decided to keep rates at their present level, leaving 8 months for the next 2 proposed hikes for this year. Yellen called the decision cautious, relying on weak global markets, but the fact is that U.S. growth is slowing. Tuesday's PPI came in negative, the Red Book and mortgage applications were down, and February's year-on-year CPI was down to 1% from January's 1.4%. The dollar dove on the announcement, lifting global shares substantially and pushing up commodities and commodity currencies. Canada reported an increase in manufacturing sales for January as the Canadian dollar slips on weak commodity prices. Switzerland also chose to maintain its current negative interest rate as the central bank reported the franc as still overvalued. The S&P has lowered expectations of economic growth from 1.5% to 1% for this coming year. Throughout the Eurozone, consumer prices reportedly fell in February, bringing core inflation to 0.8% year-on-year. Major European indexes rose on yesterday's Fed announcement, but are currently more than 1% in the red. And with UK unemployment at a 10-year low, the Bank of England is expected to also keep interest rates steady in its decision at noon today. Yesterday's earnings report showed a robust 2% too rise in UK wages. Asian markets enjoyed yesterday's announcements and closed mainly up, with the Shanghai Composite up 1.2%, the Korean Kospi up 0.66%, and the Hang Seng up 1.2%. Australia's S&P ASX 200 also gained nearly 1%, but the Nikkei fell on a strengthening yen against the US dollar. Japanese exports fell for the 5th month in a row, even though shipments to China increased for the first time in 7 months. And oil futures too made gains overnight as dovish central bank policies make riskier commodity assets more attractive. Also, a date has been delivered for the OPEC output freeze meeting in Qatar, April 17th to be precise. Yesterday's EIA crude report at 1.3 million barrels showed a significant decline in production, and both Brent and WTI are currently above the $40 mark, Brent having peaked above 41 just before 6 a.m. GMT. Meanwhile, gold has also recovered on the dollar, shooting up yesterday afternoon and maintaining a gentle upward wave, where it's currently at the 1270 mark and showing a slightly bullish sentiment. As we said, still ahead is the Bank of England's interest rate and monetary policy reading at noon GMT. That will be followed at 12:30 by the U.S. initial jobless claims and Philadelphia Fed manufacturing survey. Then at 2:30, the Conference Board's leading indicator. And at 11:50 tonight, the minutes from Japan's monetary policy meeting. Join us tomorrow for another market review from WM Options, and in the meantime, have a prosperous trading day.